bottom pullback, a DP. Here's a double bottom. Here's a pullback. I'm not going to buy that. I think the market's going down. The odds are high that it's going down. So I'm not going to look to buy until after the report. Okay, another push up, another bear bar. You could short anywhere in here. You could short below here. You could short below the bear bar, or you could just wait for the report. Market's continuing to push down. Big bar, possible sell climax. Inside bar, I'm not going to buy the first reversal up out of something so steep. It's a double bottom. Technically you could short below it. Okay, if you are selling closes, once you see a big tail, that should be the last time you sell a close, if you sell that close. You could also say the same thing about the first bull bar. Once you see a bull bar, you stop selling closes. Usually after the first bull bar or the first big tail, the shorts will get their profit, but it probably will be the last profit they get. Okay, more big tails, so they try to buy here, they tried to buy here, they tried to buy here, they're trying to buy here. So they're buying all the way down here as the market gets close to that 60-minute moving average. So if the market is buying, I don't want to be selling. Okay, possible low one short here, possible micro wedge, 1, 2, 3 big tails for the long. I wouldn't buy this. I would wait for a breakout pullback, and instead the market became a final flag, 1 bar final flag, and another sell climax below the low of the open, and I think below yesterday's low as well, and a reversal. The one thing I'm fairly confident of is that the market's going to trade up, probably several points. You can either buy above here and keep your stop below here, or wait for a breakout pullback to buy. Okay, a doji within a few bars of a reversal, 50-50 chance it's going to pull back to a higher low, and maybe 25% chance it'll just keep selling off, maybe 25% chance it won't trigger and it'll just keep going up. Those are just rough numbers. I don't know, but anyway, you have to decide what to do. If you're long here, you get a 5-tick failure. Do you get out at break even? Do you get out below this? You keep your stop below the entry bar. They're all good choices. If you do get out, you have to get ready to get back in. With all this buying and the test of the 60-minute moving average, the market should go up. Okay, breakout pullback. Not a great looking entry bar. There's sellers shorting below the moving average, aggressively selling, but they're unable to push the market down. Another pullback bar. Okay, third push up. The market might have a pullback. You got a channel look to it. First leg up should have at least 2 legs up after climactic selling. Okay, another strong looking bar. The moving average shorts are shorting here. They're shorting 1 point higher. They're shorting 2 points higher. They're shorting 3 points higher. With the moving average this steeply down, they're pretty confident that if they scale in, they'll be able to make a profit. Okay, pretty steep channel. You could short it. There's room down to the start of the channel, or you could wait to buy a higher low, thinking that there should be a second leg up. Possible higher low, not a good looking signal bar, but it triggered. Okay, so now you have a wedge, you have a breakout, and you have a pullback to a higher high. Shorting below this bar is a short. Shorting below that bar is a short. Neither one is a great looking signal bar. Bad looking entry bar. I was getting tired. I decided just to exit, break even, but I still thought the odds favored maybe 55% chance of success on the short. This is an interesting bar. It missed the break even stops on these longs by 1 tick, and it ran the stops below the double bottom by 1 tick. So it trapped weak bulls out by going below their stop probably, and it kept strong bulls in who kept a break-even stop down here. Unfortunately, the market reversed up in a large bar, and I didn't want to buy and risk 3 points, and it just trended up into the close. Going into tomorrow, this is a channel, so the market, an upward sloping channel is a bear flag. So the market could trade down, could take out this low. We could have a 2-day island top here, failing at the trend line. It's possible that the market just goes right down to a new low. As you know, I believe that we're in a bear market and that we're going to go down based upon how I look at the chart. This was very hard selling. This was hard selling. This is hard selling. This is hard selling. It's kind of like a big expanding upward sloping triangle, and the market broke out here, and the rally that we're getting here on the daily chart might simply be a breakout pullback, but I think that ultimately, we go down somewhere in this area. And I say that I think we're going down here before we go above here. But even if we did go above here and turn down, it would be an expanding triangle, up, down, up, down, up. I think we're going down, but I don't know how high up we go before we go down. 60-minute chart, as I've said repeatedly, testing the moving average after 20 or 30 bars away from the moving average. It should test the high. Normally it goes above the old high, so I'm assuming the market tests 1100, which would be in the area of that measured move. Good night, everybody.